Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 27, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? First things first, we actually do have a sign and or signal of a trend change. However, we're going to get back to that in a moment because we need to take care of an important housekeeping item. Yours truly, David, has come up with a medical issue that needs to be taken care of ASAP. It happens to us through our lives. This is one of those things that has to be done sooner than later, and I will be out of commission. However, bear with me. I'm going to give you the plan. I'm going to be out of commission for a week, give or take. Here's the plan. Lazy swing trader will operate as normal. The numbers each and every night will be done as normal. That's for inside the number and live room members. There will be no inside the number commentary while I'm gone. However, Jordan has been kind enough to take over the live room next week. So there will be a live room. There will be numbers. So the only thing there won't be is commentary each and every day for inside the number members. So therefore, all in all, from a business perspective, it's not going to be too bad for the members. We're going to get you taken care of as best we can. I have a plan. I have a team, and we're going to go from there. We'll get through this on the other side. Give me a week or give or take, whatever it's going to be. And then we're going to be right back to business. And I appreciate everybody's patience. This never happened to me before, but it's something that as we get older, we go through stuff. And we're just going to tee it up to stuff. Now, let's move on to the market and talk about that sign and or signal of a trend change. So here's one thing. They did not fill the gap today. Fair enough. They had every opportunity to fill the gap. We're talking about this gap here that comes in at 563.98. We'll call it 564 for argument's sake, as we did last night. Doesn't mean they will or won't fill it tomorrow on Friday, but they did not fill it today. But what we do have, and this is the reason I bring that up, is we do have what's called, and this is what I call it, this is in the trading parlance, we have what's called a pullback pattern. This is a channel, if you will, give or take. I'm calling it a channel. You can call it whatever you want. This is a pullback pattern. It's not a bull flag, but it's a pullback pattern that can. Doesn't mean it will right away, but it can produce a move in the upward direction. Why do I say this stuff? Because it's the market's job to trick, trap, fool, and frustrate as many traders as possible, as much of the time as possible. So when you see a pullback for a couple of days, then therefore doesn't mean the market's going to continue for the next 2 or 3 days in the same direction. That's the point that I wanted to bring to the forefront. Real quick, taking a look over at the weekly chart, no material change on the weekly chart. You can certainly make a case that they're making a bearish, flaggish pattern riding the 50-week moving average. We'll see how the week closes. Above the 50-period moving average, she's okay. Below it, she's not so okay. Now, we're going to take a little detour from an intraday perspective. This happened today in the live room. We're focused over here in the morning session where a number was given out for Reddit at 110.65. She came into 110.65 in this candle on the button. Next candle spiked it a little bit and have a rocket ride in the upward direction, making a high in this candle of 116.86. That's a hell of a day trade, if I might say so myself. That was a exclusive live room situation. Now, let's switch over to inside the numbers and see what the numbers were today, and we'll see where the pivot was, where the support and resistance was, and what happened when price got there. We're going to start with today's pivot coming in at 568.75. Now, from a numbers perspective, on the way down, we were looking for just a little bit lower. 564.20 was the number. They came up short, and they started to rip it back up in the other direction. And what we were talking about in real time in the live room was, hey, look, they're going to go back to the pivot. So what did they do? They rallied back to the pivot. And on the first run, generally speaking, the pivot is going to be A, magnetic, and B, overhead resistance. So they hit it, they pulled back a little bit, and then they fought their way through the pivot to the next number in the sequence. Well, let's take a look at what that looks like. So we'll go up here. This was the 0 dark 30 commentary. Let's go up here and we see if they can get above and stay above the pivot. She'll try and rally the tape towards 571, give or take. Let's see how that worked out. As you can see, when she got above the pivot, where did she go? 571, give or take. The high in this candle was precisely 570.90. That counts. It's in the orb of the give or take. That deserves a how you doing slash how do you like dem apples. What I wanted to do was highlight a couple of important things from inside the numbers. What I urge you to do is pause the video, read the notes, go back to the chart to double check the work. See what the commentary says. See what the in-betweener numbers are. See how things develop during the morning session. Remember, this is a morning business. Taking a gander over at Camp IWM, which is, by the way, my favorite market leading indicator, they did fill their gap down there. They're riding the 20-period moving average. This is still, it remains a pullback type of pattern. We can have a ride up from here. If tomorrow they're below this gap, all bets are off and things change. Other than that, from a daily chart perspective, there's no material change from yesterday's activity. Weekly chart, same routine, building a bearish, flaggish, wedgish type of situation above the 50 and 200 period moving average. Are they going to climb the last big time breakup candle low in the sequence or just breakup candle in the sequence? The question is, we don't know yet. We're talking about this candle here. We'll see over the next several days. Once again, over by Team Transports, we have my favorite canary in the coal mine, second favorite market leading indicator, down 8 points today, basically flat. And that's interesting. They're eating time off the clock in a bullish, flaggish kind of formation. We're going to heed that information because it is the canary in the coal mine. I think from a daily chart perspective, this is pretty important. You got other markets going down, and this market's just going sideways, building energy potentially for another move higher. Nobody's watching the transports except me and a few of you. It's like a stealth index. Stealth is a technical term. Now, when you look at the Qs, they were down about 0.5% today, $2.76. Again, is this a pullback pattern? Are they going to collapse? Did they fill the gap today? Yeah, they filled the gap today. The question is, are they going to scale down below the gap tomorrow, continue down, or are they going to bounce off the gap? It remains to be seen. We're watching the Q people. This one's important from a weekly chart perspective, riding below the 50-week moving average. This is the one that has the money managers itching in their pants. Where they close the week will be uber important. Financials down 10 cents today. We're not going to make a federal case out of that. And you know what I say, if there's nothing wrong with the financials materially, then there's likely nothing wrong with the underlying structure of the market. However, we must understand, can this be a move down, an A leg move down? How about a B leg up, okay, making a lower high, and then you have another leg down, which is a C leg that completes below the low of the A leg right here. So that can happen. It's not happening now, but it can happen. It's something we have to be aware of. We call that an awareness on the tape. Weekly chart, we make a case there's a bearish wedge situation going on. They're climbing the big time breakdown candle. The question is, can they keep doing it? Can they close the week above the 20-week moving average? We'll find out tomorrow. What do we have for smash mouth? This is a pretty good proxy for the tech space. And with that said, it was down almost 2% today, over $4. Again, we have to heed this information. The smash mouth or semi-space can't get up off the mat. They're below moving averages. The trend is your friend. You look at the weekly chart, and they're making a bearish, flaggish kind of thing already. If they make a new low, it brings that black line around 200 right into the mix. They're selling tech. They're selling the semis. Question is it temporary or is it the tell? Is it the canary for the tech space that'll take the rest of the market down with it? We'll find out sooner than later. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.